Well, let's talk about Friday. I was going to make a video on Friday, and after Friday happened, I was like, that was an awful day in the stock market again. I'm done for this week. I'm not going to record a video today. And I thought, obviously, with being Saturday, I thought, okay, we've slept on it now. I can make a video on it. And Friday was a painful day, and it was also an annoying day as well. That was the big thing about Friday. Friday was once again a very annoying day in the stock market. And right now, I would say it's probably the most frustrating time that I've been a shareholder through the stock market. Because I think the combination of seeing good news not being reflected into stocks, and stocks that I use an example of that aren't in this video today is like JD Sports. I think JD Sports in my account turned negative on Friday as a position I hold. And it's frustrating to see a stock like that turn negative when you look at their recent trading update and it was really, really good. Like, it's a good 9 out of 10, 10 out of 10 trading update. And yeah, that stock keeps going down. And that's just an example. This is an example of one stock that I've seen that you look at and go, how is this happening? You know, this is something that we're being through in 2021, 2022. 2023 seemed like we kind of were moving out there, and then we see all these things that are happening in the world at the moment, whether that be, you know, inflation or wars or slowing economies, mostly due to the likes of interest rates being pushed up too high too quickly. And you think, you know, you start to enter the point of view where you've been through this situation now for 2.5 years. And you get a little bit frustrated, and that's where I was at on Friday. I was like frustrated about what's going on in the market, and obviously the S&P was down 0.5%. You look at the Nasdaq was actually down a lot more, down 1.2%, which was a pretty ugly day. That was one of the main things for driving my account down a bit on Friday. But the big frustrating thing was like the small caps. You know, it was only on Tuesday, I think we were talking about, there's been a little bit of a rally up into small caps, which is really good. We've seen the whole market rally. And then you get to Wednesday and boom, 3% down. And you're basically back where you were at the start of the week after what looked like a really good week. And within 2 days, it gave it all back down 3%. And same again, you know, you're looking at that drop that was in the small caps. And it's once again more than what the Nasdaq was down. You know, you look at the S&P 500 in the last kind of 5 days. And I mean, what was that down? 1.3%. So you look at, once again, you see this S&P 600, the small caps, which are at historic low valuations compared to the S&P 600, and it's just dropping more and more than what the S&P 500. And I just looked at that and went, how is that happening? how is the S&P 600 still dropping more than the S&P 500 and Nasdaq, even though it's at historic low valuations? It was bonkers. And then what topped me off on Friday was this. Some of you guys know, some of you guys may not know. It depends how long you've been following the channel. About 2 years ago, I bought a very high risk company. I bought a stock called EHang. And EHang was an investment that was basically a stock that is my highest risk investment. They are a company that has very small amounts of revenue. They lose money, and they can't really sell their products yet. In case you don't know, what they do is they make these unmanned passenger drones. So you can see this is one of the drones here. This is one of the drones that are about to start flying. And I bought this around about 2 years ago, and I thought, you know, this company here, if unmanned drones comes serious to avoid traffic, easy transportation, and other things like being able to get medical care to places fast, firefighting as well. You know, you look at this company, this is the first company that has a product with, I think it's like 10,000 plus test flights. And if this is going to be a serious transportation change in the next few years, these guys are going to really benefit from it. Now the problem is like, you know, this is territory we've never been in before, so you never know if they're going to get the regulation passed through, and that's why I kept it in a small position. And for the last 2 years, it's stock that's basically sat in my portfolio and done absolutely nothing. But that all changed yesterday. What happened is they actually got their TC certificate, or type certificate, which basically means they are now going to be allowed to use these unmanned passenger drones in China. This is a game changer. Yesterday, world transportation changed. We are actually going to see unmanned passenger drones being able to be used in China. And you think, well, if that's a success, you know, that's going to follow through into the States and many other places around the world. Probably not in the UK, because we're always 10 years behind, so we might see it in 2030 something. But, you know, this is a game changer. This is transportation history changed. We're going to see unmanned passenger drones being allowed to happen, and EHang are the leaders in there. And this is game changing news. This certification is worth billions of pounds to EHang, and I thought this is great. This is absolutely great. They actually requested the stock to be halted until this news came out. The news came out, and you think this is going to be absolutely fantastic. And in pre-market, the stock was up over 100%. I thought today this stock was going to be up over 100%. I thought, yeah, you're sitting at a 1 billion market cap. You've just got the first ever unmanned passenger drone certification to go out there. That's game-changing news for transportation. It's history today. That's at least 100% today. Especially when you look at the arrival. You look at Joby. Joby is the next competitor. They don't even have production. They're still working on their prototype. They're 2 years behind. With the certification now handed to EHang, they're probably 3 or 4 years behind. This company is 3 or 4 years behind, and this company is valued at 4 billion. So I'm thinking, well, EHang's at least going to get to 2 billion today. And what happens? It goes up 100% in pre-market, and by the time it closed, it's at 18%. 18%. Like, some days I see that on no news, the stock goes up 18%. I couldn't believe it, and I know this is a very high risk speculative play that could easily crash and burn, but the reason why you invest in it is for that news, and it happens. His transportation has been changed in history, and the stock is up 18%. I couldn't believe it. This was the point where I went, I can't make a video today. I can't make a video today on a stock that I own that has just changed transportation history, and it goes up only 18%. I thought, give me a break. I thought, I can't make a video today. This was another one that pushed me over the edge today. Look at the drop is nearly off the stock chart today. I can't believe in mode. Yesterday, 7% down. Obviously we had the drop where they had a slight, we had a 20% drop where there was a slight miss, or change in the guidance. I've seen InMode do that guidance hike 12 times at least, and yet the first time it does it, it drops 20%. It's one of those where you look at the stock market and you're like, you're so frustrated looking at it. Some of you guys, I think, in the comment section were saying that probably not because of earnings, it's probably because of the whole Israel situation. Maybe I agree now. How the stock is still dropping is unbelievable. Like, maybe it is the whole Israel situation why the stock's dropping. We're talking about a company here that has 30 million change in its guidance, and you look since July time, and the stock's down 54%. To justify nearly a 1.5 billion wiped off the market cap, what, because of a 30 million drop? Obviously some people talk about the war situation, but it doesn't really affect the numbers. It's crazy. When you think, the big thing is when you think a stock can't go lower, even when you look at InMode, historic lows, you look at the company going, who is going to sell off a company that is doing this revenue growth, doing this profit growth, has, one of the best balance sheets that you've seen. It's no debt on there, sit on 629 million of cash. You're talking nearly a third of the market cap's in cash, and it goes to 9 times earnings. It's crazy, absolutely crazy. If this doesn't give management team a kick up the backside to deploy 200 million to the share buyback, I don't know what will, because they've got to buy back shares now. They've got to buy back shares. That's what management have got to do now. But buybacks aren't the ultimate answer to it. Realistically, I've seen many companies do share buybacks and they don't get rewarded on the share price. When you think it's the ultimate saviour of a share price, I can't believe that. I look at Perion as well. Perion as well is having a drop. That's down 35%, but not the likes of InMode. So I don't know. It's one of those that you just look at and go, how is it even dropping that much? That's a bit too much. Oil, bad news with oil. Oil started going up again yesterday. Lot to do with geopolitical tensions, whether you look at the Israel situation that's going on at the moment, whether you look at the sanctions that the US put on Russia, but oil is going up, and that's not good, because obviously we talked about the one thing that makes inflation look a little bit worse than what it is right now is because of the oil. We know it's basically two things that are holding that inflation up, which is shelter and oil. Oil was pretty much down, and shelter was the only thing that was holding up inflation. But if if oil does keep going up like how it is doing, obviously that's going to make the inflation figures look a little bit worse than what they actually are, which we don't want to see. And that's something that's going on in the background, which weren't another good bit of news on Friday. And the last thing, this was another thing that I went, I'm done for today. Microsoft were able to buy Activision. Now, I think this is a good deal for Microsoft. I think it's a good deal for Activision. Activision obviously is in a little bit of a mess at the moment. Makes a good time to sell the company. Microsoft, with the gaming situation, looks a pretty good addition to their platform. But I've got to say, like a 69 billion buyout, and you look at the monopoly that they will be able to create with Activision. You look at the game titles they will be able to hold and be able to control compared to other releases of like maybe PC or PlayStation. You think, realistically, should this deal be allowed? You talk about the crackdown in big tech and antitrust and monopolies they're building up. You've seen the success that they've had for many years, buying out smaller companies to be able to keep up their moat. And you talk about how they've been able to keep at the top of the list because of that. And you think, realistically, you hear about this tech crackdown all the time and, the monopolies. And then something like this gets allowed through. You're like, are we just talking about this, or is this actually going to happen? Because if you're ever going to probably block one, this is probably the one that you're going to be blocking. And obviously it got let through, and it just went. There's been times where I've seen companies that have been like 1 billion companies that are not allowed to buy other billion companies because of them anti-monopoly. You look at the likes of, I don't know if many of you guys know this, but DraftKings and FanDuel were going to merge a few years ago, and they got blocked because of a monopoly. And then, you look at this and you think, well, where does this where does the big tech crackdown actually start then? Because this is probably the biggest one that you'd make a statement of going, nope, that one's not happening, and then this one gets let through, and it's just like, where's the consistency with this whole thing? That was the last thing on Friday that went, really? Like, it just doesn't make sense with sometimes with what's allowed and what's not allowed, I guess, really. So some of those ones where you're actually like thinking, do these big tech platforms in the US actually have the US government by the actual I can't say the word on the on this video, but actually gotten them hold by the chestnuts and actually control them? I don't know. So Friday was just one of those days where I went, I can't record a video today because I just went, this is unbelievable. Between oil going up, seeing big tech get away with once again a monopoly, seeing InMode go even lower, seeing Ehang, one of my high risk plays, granted, is very high risk, but has game changing transport news and only goes up 18% compared to a rival that's valued at 4 billion that they're 3 years ahead of. I just went, that's enough for today. So I think this week goes down as one of those weeks that you just go, we'll write that one off. There was some crazy moves out there. Granted, potentially could be very good buying opportunities out there, but even though they are potentially maybe buying opportunities, you're frustrated at them. You're frustrated at them because they shouldn't be happening. And we'll see what next week has for us, and as we start moving into the peak of earnings season now anyway. So I hope you enjoyed the video. I hope you have a good weekend. A needed break from the stock market, I think, this weekend. And I'll see you probably on Monday.